Welcome to the deep dive. Today, we're taking a closer look at Olam Group's 2024 performance. We've got their annual report right here, and our mission really is to pull out the key insights, what's happening with their business segments, the financials, where things might be headed. And Olam is, well, it's a massive global agribusiness. So understanding their year gives us a pretty good window into the whole sector. Let's jump in.
Absolutely. And you open that report, and the first thing that hits you is the scale, but also how it's structured, primarily around Olam Agri and OFI. Those are the two main operating groups, and they really drive the story.
Okay, yeah, let's start with Olam Agri then. They seem to have been busy expanding in 2024. What about that Avison acquisition in Senegal? What's the thinking there?
Well, that Avison deal, it's more than just buying a company. It's a strategic move. Olam Agri is clearly trying to strengthen its foothold in animal feed and protein in Africa.
Right.
And Africa's got huge potential there. Avison was the #2 player in Senegal, so it's about market share, yes, but also about tapping into that local demand and, maybe building out a stronger regional supply chain.
Okay. And they also finished building that soy crushing plant in Nigeria, right? And boosting pasta and flour in Ghana. Feels like a shift beyond just shipping raw goods.
Precisely. That's exactly it. It signals a kind of deliberate move towards value add locally. The Nigeria plant, processing local beans. That hits demand for both animal feed and edible oils. Supports local farming, too, and more pasta and flour in Ghana. That's about feeding people locally, boosting food security, maybe less reliance on imports down the line.
And then there's the fiber segment. You mentioned improvements in Côte d'Ivoire with cotton ginning, more sawmilling in Congo, new rubber processing back in Côte d'Ivoire. It's quite a mix.
Yeah, it shows they're optimizing what they already have in these key production areas. Better cotton ginning means likely higher efficiency, better quality cotton for the global market. Expanding sawmilling in Congo leverages the timber resources there, and the new rubber processing just strengthens their hand in that whole natural rubber value chain.
Got it. And India saw more sugar crushing capacity and a bioenergy plant, integrating assets from the remaining Olam Group, as they call it.
Yep.
Plus, moving the Mozambique edible oil business into Olam Agri. It looks like some internal shuffling and focusing.
Absolutely right. Putting Mozambique oils under Olam Agri makes sense with their Africa food and feed strategy. And India, that's interesting, sugar for food, plus bioenergy, sort of maximizing the use of those assets. And yeah, pulling things from the remaining Olam Group suggests Olam Agri is getting a clearer focus now.
Okay, let's switch gears to OFI, Olam Food Ingredients. Their focus seems different, more on solutions and what customers need. How's that working out?
Yeah, with OFI, what really stands out is this push to understand, maybe even anticipate, customer and consumer wants. The launch of their F&B solutions platforms, that's a perfect example. It's about using their ingredient smarts to help food companies cook up new products, respond to changing tastes, health trends, all that.
And these customer solution centers, Amsterdam, Bangalore, Chicago, Singapore, Shanghai, sounds like they're the engine rooms for this strategy.
Exactly. They're innovation spaces, collaboration hubs. UFI experts work directly with customers there, testing ideas, using UFI ingredients.
Right.
And they just opened new ones in Chicago. That's their North American HQ, in Shanghai. Plus a new private label nut facility in Arizona. It shows they want to be close to their key markets, offer those tailored solutions.
The report also mentions wanting to enter new high-growth markets, Africa, Middle East, Asia, and for Olam Agri, looking into complementary businesses. So still ambitious growth plans overall.
Oh, definitely. The strategy seems to be a balance. Go deeper where they are strong, but also selectively step into new areas with big potential. And for Olam Agri, complementary businesses could mean, while using their existing setups or farming know-how in related areas, maybe diversifying revenue a bit.
Okay, let's turn to the numbers, the financial highlights. Group revenue jumped quite a bit, up 16.3% to $56.2 billion. Sales volume also up 12.5%. What drove that?
Well, the big driver for that revenue spike was really commodity prices, especially coffee and cocoa. They were significantly higher. So yes, they sold more volume, which helped, but those high prices had a huge impact on the top line. It really shows how linked Olam's results are to those global commodity markets.
And profitability. Operating profit, EBIT, was up 9.2% to $1.9 billion. How did OVI and Olam Agri contribute there?
OVI actually had really strong profit growth. Their EBIT jumped 29.1% to over $1 billion, $1,070.7 million, mostly driven by ingredients and solutions, which kind of proves their value-add strategy is paying off.
Good for them.
Yeah. Olam Agri also chipped in positively. EBIT up 5.8% to $1,023.8 million. Their fiber, agri-industrials, and ag services segment did particularly well. But it's worth noting the remaining Olam Group actually saw bigger losses, which dragged the overall group result down a bit.
Okay, let's drill down on Olam Agri's numbers a bit more. Sales volume up 14%, you said, but revenue only grew 5.9%. Why the gap?
That difference, yeah, really shows that price effect again. They sold more stuff volume-wise.
Right.
But the average selling price for some key things was lower than the year before, so that kind of dampened the revenue growth. Still, their operational efficiency seemed solid. They maintained a healthy EBIT per metric ton to $23.
Olam Agri's invested capital also shot up 23.1% to $6.7 billion, mostly working capital, the report says. How did that affect their efficiency metrics?
Yeah, that big jump in invested capital, especially working capital, probably tied to holding more valuable inventory because of those high prices. It did bring their EBIT over invested capital ratio down slightly.
Okay, the EBITDA.
Right, EBITIC dropped to 16.8% from 18.3%. Still a decent return, but, the bigger capital base diluted it a bit. The report did call out good performance in wheat milling, edible oils, but mentioned challenges in rice, particularly due to market conditions in Africa.
Let's talk cash flow. Net operating cash flow turned negative, $3.5 billion negative. That's a huge swing. What happened?
The main reason for that negative operating cash flow was just a massive increase, a deployment of cash into working capital. It's likely a direct result of those higher commodity prices, again needing more cash tied up in inventory, managing bigger receivables. And that increase in working capital is also why free cash flow to firm, FCFF, and free cash flow to equity, SCFE, were also negative.
Okay, makes sense. And their debt, gross and net debt, both went up. Should we be concerned?
Well, gross debt did hit as $23.1 billion, and net debt reached $19.8 billion. So, yeah, they increased. However, it's interesting. Their adjusted net debt, which accounts for readily marketable inventory and secured receivables, things they could quickly turn into cash, that figure stayed relatively stable at $4.8 billion.
Okay.
So while the headline debt-to-equity ratios went up, the adjusted numbers suggest things might be more manageable when you consider those liquid assets. The higher interest paid also played a role in those negative free cash flows, of course.
Right. Moving on to shareholder value creation, they started a share buyback program. What are the details on that?
Yes, Olam Group launched a plan to buy back up to 5% of their outstanding shares. In 2024, they actually repurchased about 25.1 million shares, spent $28.5 million doing it.
Okay.
Buybacks are pretty common, right? A way to return cash to shareholders. Maybe single management thinks this stock's a good buy.
But the really big news here seems to be selling that large stake in Olam Agri to Selic. Can you break that one down? This seems pivotal.
Oh, it absolutely is a major move. Olam Group agreed to sell a 44.58% stake in Olam Agri. The buyer is ALIC. That's the Saudi Agricultural and Livestock Investment Company. The price is about US $1.78 billion. Wow. And that price implies a total valuation for Olam Agri of around US $4.0 billion. Olam Group expects a huge gain from this, US $1.84 billion, which goes straight into their equity reserves. Big boost to the balance sheet.
And what happens with the rest of Olam Agri? Olam Group still owns a piece?
They do. Initially, they'll keep about 20%, specifically 19.99%. But the deal has options built in. Olam Group gets a put option. They can require Salic to buy the remaining stake after 3 years.
Okay.
The price would be that initial valuation plus a 6% annual return and IRR. On the flip side, Salic gets a call option. They can choose to buy that remaining stake within the same 3 years at the same price.
So it gives Olam a clear potential exit path and Salic a route to full ownership.
Exactly. Provides clarity for both sides down the road.
And finally, on returns to shareholders, dividends. The report mentions proposing a final dividend for 2024.
Yes, that's right. A second and final dividend is proposed. Payment date is set for May 14th, 2025, for shareholders on record as of May 6th, 2025. The exact amount per share wasn't in the bits we saw, but it's subject to shareholder approval, naturally. It's another direct return of profit.
So putting it all together, looking ahead, how do you assess the business moving forward, especially with this big Olam Agri change?
Well, for Olam Agri itself, the future seems really focused on being this sustainable, integrated food security leader, especially in those high-growth emerging markets. Partnering with Salic should give them serious capital and strategic backing to push that agenda. But they still face those headwinds we mentioned, high interest rates, currency swings, maybe slower economic growth in places. They'll need to navigate that.
And for UFI, the ingredients business.
For UFI, the strategy seems pretty consistent. Keep driving growth as a sustainable ingredient supplier. They're really banking on innovation, those customer solutions, through the F&B platform and the CSCs.
Right, the Customer Solution
Okay,
Centers.
exactly. And their whole sustainability framework, choices for change, is key. Meeting regulations like the EUDR for deforestation-free commodities, that's going to be critical for keeping customers happy and staying competitive. Plus, they're investing in tech, like OFI Direct and Terrascope for efficiency, traceability, sustainability. All very important.
So that Olam stake sale to Salik, it feels like the defining move of the year, maybe longer. What's the big picture strategic reason, do you think?
I think the main rationale is probably twofold. First, unlock significant value that was maybe tied up within the larger group structure. Second, allow both Olamagri and OFI to really focus on their distinct strategies. They can maybe access different kinds of capital now, different expertise.
Right, allows them to specialize more.
Exactly. And that huge gain from the sale, it seriously strengthens Olam Group's overall balance sheet.
Hmm.
Gives them more financial firepower for future investments, maybe growing OFI faster, maybe looking at other opportunities in the remaining parts of the group. It's a major reshaping, no doubt about it.
Well, this has been a really fascinating deep dive into Olin Group's 2024. We've covered the strategic moves, the key financials, and what might be next. That Salic deal is definitely the big story. Just a reminder, of course, this is our take based on the annual report sources we had. For the full picture, definitely check out the complete report.
Indeed. And maybe a final thought to leave listeners with. Given this big strategic shift, selling a major piece of Olam Agri, how might that ripple through the global agricultural supply chain? What could it mean for competition in the whole agribusiness world over the next few years?
That's a great question to think about. Thanks everyone for joining us for this deep dive.